Good morning, everyone. Thank you for joining us. We're just waiting for a few more people to hop on today.
So this is probably our largest webinar, right?
Yeah, I think so.
That's awesome.
Well, such a fun topic. Everybody just really wants to talk about COBRA.
Exactly. Riveting.
Riveting.
It's funny, I had to panic. I was telling Graceland, I had to call in Sarah this morning because my background kept having a watermark on it from this thing I was trying to download yesterday. It was hysterical. So the guy from Sarah was like, yeah, he's like, I disabled that. I'm like, well, it's not disabled.
Be careful what you say. I think there's some Ansero people listening in right now. So they do a phenomenal job though. So, you know, you're not going to say that anyway.
Yeah. Oh no, very helpful.
It wasn't just the background, it was also covering part of your nose when we were on the call yesterday. It was a very aggressive marketing tool on part of the company that was using it.
Maybe give it one more minute, then we should get started, just to be conscious of everybody's time.
Yeah.
Yeah, I think we probably can get going. The numbers seem to have plateaued. It's held at that same number for a little while now. So
Great.
All right. Well, let's get started. Thank you all for joining us today again. My name is Grace Shallow, and I am the Communications Specialist here at Katz Pierz. Today, our webinar is about the 2021 COBRA Assistance Program that was included in the American Rescue Plan Act. Before we get into this important topic, just a few quick housekeeping items. In your GoToWebinar menu, there should be a drop-down option for a questions and chat box. We encourage you to type any questions you may have into that box, and we will be leaving time at the end for a Q&A. This webinar is also being recorded and will be posted on our blog. I will share a link to that so you can access that later on. And I don't want to take any more time away from this important topic, so I'm going to pass this over to one of Katz Pierz principals, Joe Sulpizio.
Great. Thank you, Grace. Again, everyone, my name is Joe Sulpizio, and good morning. I am joined by fellow principal Lenny Katz. And before we get started today's presentation, I'd like to take a quick introduction to Katz Pierz. We do have a number of people on today's webinar. Probably we broke the record today for a Katz Pierz webinar. I think we have over 100 participants. So we thank you for joining us. We think that's awesome. But for those of you new to Katz Pierz, we are a local employee benefit firm that's been in business for over 30 years, located in Cherry Hill, New Jersey, with a national footprint through our affiliation with United Benefit Advisors. As you can see, that we focus on three main areas for our client needs. First, we aim to improve the financial performance of their plans, and this can be done in a number of different ways. Most notably by reviewing alternative funding arrangements like self-funding and captives, to implementing cost control programs and utilizing performance dashboards. The next area of focus is to improve administrative efficiency. As you can see, we cover a lot of ground here, from evaluating payroll systems and integration with benefit enrollment systems, to including basic enrollment and billing support. This also includes our HR webinar education series like today's. Lastly, but just as important, we help your employees be better consumers. This is important because better consumers generally means lower plan costs. Here we emphasize employee education, introduce wellness initiatives, and provide claims advocacy, just to name a few. Now let's turn our attention to today's topic and the American Rescue Plan Act. The American Rescue Plan Act, or ARPA, was signed into law by President Biden on March 11th. This was a small 628-page bill with a big cost of $1.9 trillion. The bill addresses the ongoing economic challenges as a result of the pandemic and includes a lot. Direct stimulus payments to households, extension of unemployment benefits, and help for state and local governments. From an employee benefit perspective, it includes an extension of the FFCRA Leave Act and extends the tax credit through September 30th of this year. It also increased the dependent care assistance program contribution limit from $5,000 to $10,500 in year 2021. But today, we're only going to focus on that COBRA subsidy program. We do have one word of caution. Even though our name sounds like a law firm, this advice is not meant to be construed as legal or tax advice. The law is going to constantly change and be updated through the Department of Labor notices and model notices and clarifications. So it is a high, as Lenny mentioned, a highly complex and fast-moving area. So we just ask that you be patient, take this information as it is today, and be, wary of new developments as they come. So now, without further ado, I would like to turn today's presentation over to our professor, Lenny Katz. There you go, Len.
Thanks, Joe. I'm going to turn off my camera just so we can focus on the material. Thank you, everybody, for coming on. To reiterate what Joe said, this thing is evolving very, very fast. The bill itself is only a couple of weeks old. We're learning as we go, but we really thought it was important that we get out in front of this and let all of you know about what's happening, what's coming, what responsibilities you're going to have pertaining to COBRA and the subsidies that are starting on April 1st. Again, there's going to be questions. We may not have some of the answers. There's a few open issues still. We're waiting for some guidance from the Department of Labor. So generally speaking, it's a subsidy that provides 100% temporary payment of COBRA premiums on behalf of qualified beneficiaries. The new term of art that you're all going to have to get used to is something called an assistance eligible individual. An assistance eligible individual, or AEI, is somebody who is eligible for COBRA, be it an employee or a dependent. They could be on COBRA today. They might become eligible for COBRA in the future, or they're not on COBRA at all, but as you'll learn, they had a qualifying event all the way back to November 1st of 2019. That person may in fact also be an assistance eligible individual, and we're going to talk about that in a few minutes. The qualifying event here is an involuntary termination or a reduction in hours, and the assistance eligible individual is also not eligible for another group plan or Medicare, and we're going to talk about some of these things in more depth as we move through this. But it's important to recognize that an assistance eligible individual is not just anybody that's eligible for COBRA. If your employee left on a voluntary basis, they don't qualify. If it was a retirement, a divorce, a death, or an age out, any of these other qualifying events that would normally allow COBRA continuation, those people are not assistance eligible individuals. So the subsidy amount is the actual COBRA premium, including the 2% administrative fee that's charged by most COBRA vendors and the fee that an employer is allowed to charge for administering COBRA on behalf of the beneficiary. The program applies to all group health plans, whether they're fully insured, level funded, or self-funded, that are subject to COBRA. And currently, we believe it also applies to state mini-COBRA. Again, that might change with some Department of Labor clarifications, but we're pretty certain it will apply to New Jersey mini-COBRA and Pennsylvania mini-COBRA. It also includes dental, vision, and health reimbursement arrangements. It does not include flexible spending accounts. So the subsidy period runs from April 1st, 2021 through the end of September 2021. That's the period during which a COBRA eligible, assistance eligible individual can receive free coverage on your plan subsidized by the federal government. That period will end sooner if the individual reaches the end of their maximum coverage period, which is their 18 months, or if that individual becomes eligible for another group health plan or Medicare. Now you're going to see down below that there are some penalties. So if an employee or if a former employee fails to notify the employer that they are in fact now eligible for Medicare or another group health plan, they're subject to a $250 fine. If they intentionally hide that, and we all know this is going to be hard to prove, the fine is the greater of $250 or 110% of the COBRA premium. Now, I want to take a minute and go back and look at the word eligible, because under normal COBRA rules, somebody is continuing their eligibility for COBRA, even if they are in fact eligible for other group plan or Medicare. They would only lose their normal COBRA if they enroll in those plans. But this rule, this legislation is very clear that if someone is eligible for another group health plan or Medicare, they lose their status as an assistance eligible individual. The assistance eligible individual will not be required to pay the COBRA premium. The COBRA premium is advanced by the employer, the plan, or the insurer, and then reimbursed by the government through a refundable tax credit against Medicare hospital insurance taxes. If the credit exceeds the taxes payable, the excess is treated as a refundable overpayment. You know, to Joe's point earlier, we're not attorneys, we're also not accountants, so you're going to need to talk to your accountants about that nuance and your payroll company as well. For fully insured or self-funded plans, the employer pays the premium and then files for the tax credit. Now, this is one point where we've seen different interpretations of the rule. We are fairly certain that it will be the employer in an insured, fully insured, or self-funded arrangement. But we've also seen some language that mini-COBRA fully insured plans, the insurance company would actually front the premium and takes the tax credit themselves. So that's an open item that we're waiting for some clarity on, but I'm pretty sure it's safe to say that it's going to be the employer's responsibility to pay that COBRA premium and then take the tax credit to offset the cost that they've incurred. So the other nuance here is that the subsidy program comes with a special enrollment period. The special enrollment period allows an assistance eligible individual, even if they never enrolled in COBRA or they enrolled in COBRA and then they dropped COBRA, the ability to return to your plan proactively effective April 1st, provided they still have provided they're still within their 18 months of COBRA coverage period. So theoretically, somebody could even come on your plan for 1 month and then their 18 months would end. The assistance eligible individual has 60 days from the receipt of the new COBRA notice to elect prospective coverage. We're going to talk about notices in a few minutes, but every employer is required to reach out to all these COBRA eligible, assistance eligible individuals and provide them with a new notice about the subsidy. Upon receipt, that individual has 60 days to come back on your plan, effective 4/1, moving forward. The assistance eligible individual is not required to pay previous premiums back to the original COBRA eligibility date, and coverage is not retroactive. It's proactive, prospective. The actual subsidy itself will begin on April 1st, 2021, as we mentioned before, and it will end if the assistance eligible individual becomes eligible, as we discussed before, for another group plan or Medicare. The 18 months of COBRA coverage period ends. The 6 months of the COBRA subsidy period ends. And yes, if somebody still has time on their 18-month clock, they can remain on your plan, pay the COBRA premium plus the 2%, as they've always done, beyond September 30th, and stay on your plan until the end of their 18-month COBRA coverage period. I like to look at visuals, so here's just kind of a timeline. Notice this goes all the way back to November of 2019. So in this particular instance, there was a qualifying event at the end of December. This person was, October. This person was eligible for coverage through COBRA on November 1st. They elected COBRA by January 1st. COBRA began for them November 1st, 2019. In this example, this individual dropped their COBRA, lapsed it in June. Well, because this person is in fact an assistance eligible employee, they have a second bite at the apple, a second chance to jump on the plan. On April 1st, 2021, they decide to enroll. Because this individual's 18 months ended at the end of April, this individual gets to be on your plan with a subsidized COBRA premium for 1 month. Another example, this individual has a qualifying event at the end of April or the beginning of April 2020. They do not elect COBRA at all, no election. But in this example, this assistance eligible individual gets a new notice, decides to enroll, starts back on your plan April 1st, 2021, and actually has coverage to the end of their, what would have been their 18 months beginning April 1st, 2020, ending at the end of September. So they get to be on your plan for 6 months at 100% subsidized COBRA premium. This particular example, we have a qualifying event at the end of December 2020. So the qualifying event allows the person to join on 2021, January 1st. So COBRA starts because they did elect within their initial 60 days. This individual will be paying for their COBRA premium here. And then on April 1st, they get a subsidy. That subsidy will pay their COBRA premium through the end of September 2021. Then that individual will remain on the plan until the end of their 18 months of COBRA, which takes them through July of 2022. During this special enrollment period, the employer has an option. I will say this multiple times, this is only an option. It is not required. If an employer would like to offer a second plan, to these COBRA assistance eligible individuals, you can do so. The plan option must be the same or lower premium than the original COBRA offer. The plan must be one that is already offered to similarly situated employees. So it's important to note that you can't go back to your carrier and develop a new plan just for these folks. It has to be something that's already in existence. The AEI has 90 days from the date of receipt of the new COBRA notice to join the alternative plan, and the alternative plan can't provide accepted benefits, meaning it can't just be dental, vision, or an individual HRA, individual coverage HRA, or an FSA. Just a sidebar here. We've been talking about this a lot, trying to figure out what the intent was of the legislation to allow a second offering. And we think the only reason that makes sense for an employer to do so would be that individual who will remain on COBRA past the subsidy period. And this gives them the opportunity perhaps to have a lower cost plan through the end of their 18 months. But again, strictly optional, not required.
Lenny, we do have some specific questions about the special enrollment period.
Sure.
So do you think you can clarify how long the assistance eligible individual has from the time of notice of the special enrollment period to take that option up? Is it 60 or 90 days?
They have 60 days to accept the offer of the second chance, if you will. And then that will be retroactive. Coverage will be retroactive to April 1st. The 90 days would apply if, as an employer, you're offering an alternative plan. So the legislation is giving the normal 60-day window to take the plan that you were on, but the federal government's allowing an individual an extra 30 days to kind of assess what the new plan might be if they want to join that.
Okay. And we have another question about the special enrollment period. What happens if an employer's insurance changes during that time? So if their entire medical plan changes?
Yeah, that's a great question. And that, I hate to say we're kind of waiting for Department of Labor clarity on that, but there really is only one logical option, one logical answer, and that has to be that if you've changed plans or you've changed carriers, that individual would be eligible for whatever plan you offer at the time they jump back on your plan. We can't go back to a carrier or go back and institute a plan that we're not currently having any active enrollees on.
Mm-hmm. Okay. And do you have to go back to all employees that participate in the plan or all employees who left employment after November 1st, 2019 and notify them of this new option?
Yeah, that's a great question. And when we get to the end, we actually put together a little checklist for everybody. But the answer to that is November 1st, 2019 is as far as you really need to look back. But the key is not all COBRA beneficiaries are assistance eligible individuals. It's only those that lost their coverage due to an involuntary termination or a reduction in hours. So when you're looking backwards, those are the folks you need to identify. And that's a perfect segue to our screen that we're looking at right now. Those are the individuals that need to receive the new notice. So we're waiting for Department of Labor to issue a new model notice that employers and COBRA vendors can use to send out to these AEIs, those individuals that are COBRA eligible due to involuntary termination or a reduction hours, and they are still technically within their 18-month of original COBRA coverage period. That's why we're really only going back to November 1st of 2019. We don't have to look further than that because the 18 months will have been over by the end of April. Okay, employers will have to send these notices by May 31st. Again, the Department of Labor was tasked with issuing those notices in the next couple of weeks, so we will have them. Employers and COBRA vendors will send them out. Employees, upon receipt of that notice, will then have 60 days to retroactively enroll in your plan back to 4/1/2021. Again, not back to their original COBRA effective date, but just back to 4/1/2021. Failure to provide the notices is subject to the normal COBRA penalties for notice failure to file notices or provide notices. There's a second notification that's built into the law. The employer must also provide a notice to that AEI, letting them know when their COBRA subsidy ends. So even though the COBRA subsidy program ends on the end of September 2021, somebody that's on the program needs to be notified prior to September 21st that their subsidy would end on September 30th. And if their subsidy ends before that, they would still be notified of when their subsidy would have to be ended. And again, this is something that we've talked to some COBRA vendors about. We're thinking it'll have to be a second notice and not be provided in that initial notice. There's some timing elements. And again, we're waiting for Department of Labor to give us what those model notices are going to look like. I know at this point, this is probably how many of us feel. So we thought that looking at a sample scenario, an example might help. So Jim was involuntarily terminated by Starfleet on December 1st, 2019, and he did not elect COBRA. He is an assistance eligible individual because his termination was involuntary and he is not eligible for another group plan or Medicare. So even though he did not elect COBRA when he was first eligible, he will receive a new notice from Starfleet, his employer, alerting him of his special enrollment period because his original 18 months of COBRA has not ended, COBRA coverage. So he now has the opportunity to elect COBRA within 60 days, even though his initial election period expired way back in January of 2020. He is permitted to elect COBRA and enroll effective April 1st, 2021, and he does not owe any back premiums. His employer will be charged Jim's premium. Jim's employer will also most likely be charged the 2% from a COBRA administrative vendor beginning on April 1st, 2021. Starfleet's COBRA administrator will send Jim all the required notices, the initial notice and the notice of when his subsidy will expire, in this case, on May 31st, 2021. His COBRA will also end on May 31st, 2021, because at that point he will have exhausted his initial 18 months of COBRA coverage. Because remember, this subsidy does not extend that original 18 months. It only provides up to the 6 months of COBRA subsidy within the 18 months. In this example, Jim never owes any COBRA premiums, and his employer will recoup his premium through the tax credit against Medicare hospital insurance taxes. We put together an action notice, an action list, because there are some things that you have to be aware of and you have to do. So I think the most important thing is right now, when you get off this webinar, go talk to your HR people, talk to your personnel people, talk to your payroll people, identify who is an assistance eligible individual that lost their eligibility all the way back to November 1st, 2019. Those are the ones that we have to identify. And again, they are only those COBRA eligible people who lost coverage due to involuntary termination or a reduction in hours. It's interesting, and those of you that are on point with COBRA, you know that most of that data is currently not transmitted to your COBRA vendor. COBRA vendors today want to know what the qualifying event was. They want to know who the person was, but they don't really need to know under the current COBRA regs whether it was an involuntary termination or a reduction in hours. They simply need to know, was it a termination or what was in fact the loss of coverage. So you will have to put a process in place to identify those people going backwards and also be able to identify those people going forward so that when you notify your COBRA vendor of a COBRA action moving forward, you'll also be able to tell them whether that individual is in fact assistance eligible or not. You'll also need to talk with your internal team and decide if you want to offer that second alternative lower cost program. And if you do, you're going to need to send that information over to the COBRA vendor along with some plan details so that your COBRA vendor can push that alternative offer out to the assistance eligible individual. And remember, they get an extended period of election. They can get 90 days to say yes or no to that offer. It's also a very good idea to have a conversation with your COBRA vendor. And I think it's a little bit early at this point. We are having a lot of conversations with all of our COBRA vendors on behalf of our clients that are on the call, learning from them, how is the 2% going to be administered? Because there is still a fee. Will that COBRA vendor be sending out notices? Will that COBRA vendor be charging additional cost for those notices? It certainly seems that most COBRA vendors that I've spoken to will be having additional fees for sending out these additional notices. But again, you don't want to be caught flat-footed. You want to know beforehand. We think the most important thing is just to be patient. This is evolving. There are things that we're waiting for from the Department of Labor. The model notices should be out in the next 2 weeks. The legislation did put a deadline on the Department of Labor to issue those, so we should have them. When we have more clarity, we absolutely will push out information as it becomes available. I also think, especially for our self-funded clients that are on the call, it's important to have a conversation with your COBRA vendor about the word eligible for other group coverage. I've talked to a couple of ERISA attorneys about this. They seem to agree with us that eligible for another group plan also includes your spouse's group plan. So in this example, if I'll pick on Joe, if Joe were involuntarily terminated by Katz Pierz tomorrow, he would be in fact an assistance eligible individual. If he had a spouse that was employed and had group coverage, his termination from our plan, his loss of coverage from our plan, would be a qualifying event for him to join his spouse's plan, which technically makes him ineligible for this subsidy. Now, I know saying that makes it really hard to prove. We're waiting again what kind of language this model notice will have to try to reinforce that position. But I think it's something employers need to think about as they push out notices or maybe even cover letters to these folks. On the one hand, it's great, and we certainly support the idea of people who need assistance getting assistance. But at the same time, we also know that if you're a self-funded employer, somebody jumps back on your plan, you as the employer now have additional cost liability in terms of claims that might be incurred. So we really only want people that truly are eligible coming back on the plan. And if that individual is eligible because of Medicare or group coverage elsewhere, we really want them to know that they're not eligible to come back with a subsidy. So again, let's all be patient. Hopefully, and we tried to put this in perspective of what we call practical language so that everybody listening can leave here and have a sense of what they need to do and what's coming at us. We are waiting for more clarification. Open things up to some questions if there are any.
We do have some questions. So going back to the eligibility for this COBRA subsidy program, someone asked, what about termination for cause?
So I believe the answer to that is no, because they're not even a COBRA eligible person, right? In order to participate in the subsidy, you need to be eligible for COBRA. And if you're terminated, for gross misconduct, which would typically remove your eligibility for COBRA, I think that would also follow through here. But again, I'm going to beg off a little bit and say we're waiting for some clarity on that one.
Mm-hmm. Yeah, this will probably tie into the model notices that we're waiting for from the Department of Labor as well. But the question is, are employers required to offer COBRA again to employees terminated back to November 2019?
So yes, if somebody lost their coverage all the way back to November 1st of 2019, and if that reason was a reduction in hours or involuntary termination, and again, if they're not eligible for Medicare, and if they're not eligible for another group plan, then yes, they are eligible to come back on and have a second chance of enrolling in your plan. Again, being cognitive, be very aware of the 18 months. So if the event happened in November of 2019, they really only get to be on your plan for 1 month, because at the end of April 2021, their 18 months would have otherwise ended.
Mm-hmm. Yeah. And so this ties into that example you were giving us of someone who is already on COBRA, and then the COBRA subsidy begins on April 1st. But if someone is already on COBRA, do they automatically become a part of this subsidy program?
I'm going to say yes and no. Yes, if
Mm-hmm.
yes, if they are an assistance eligible individual. No, if they're not. If the person is on because they aged off the plan, no. If the person is on COBRA because they quit, so it's a voluntary termination, no, they're not assistance eligible. They need to qualify as an assistance eligible individual, involuntary termination, reduction in hours, still within the 18 months, not eligible for Medicare, not eligible for other group coverage.
Mm-hmm. And so this is about the level of coverage that someone can have with this program. Does the subsidy only cover employee-only coverage, or does it cover whatever coverage level the associate had prior to being terminated?
That's a great question, and I should have been more specific about that earlier. It would cover the entire family unit in that particular instance. So if I'm on COBRA with my full family, and if the reason for my COBRA was an involuntary termination or a reduction in hours, and all those other qualifiers are true, my full family coverage COBRA premium would be subsidized.
Mm-hmm. Yeah, and this is sort of a similar question, and I think you just answered it, but I just want to make sure we're clear. Would this cover dependents they had on their plan?
So yes, it would.
Mm-hmm.
It would. Now, I will also take it a step further, and we know that COBRA has a million nuances. If my wife and I are on COBRA due to an assistance eligible qualifying event, and I turn 65, but my wife does not, and I am therefore eligible for Medicare, she will be able to stay on as a COBRA eligible individual with a subsidy, even though I, as the employee, have lost my eligibility. Because once you get into COBRA, each COBRA beneficiary has their own rights under the plan.
Okay. And so the next question is, if a company currently offers 2 medical plans, then can they send out a new COBRA notice to the assistance eligible individual member with only the lower cost option, or is the employee required to send a notice with both medical options?
That's a great question. My gut tells me that you would offer both. I haven't seen anything specific in the language. Joe, I don't know if you have, that says you're allowed to just offer the lower plan. I would say no, because in the initial COBRA qualifying event was on the plan was on the higher plan, which is the plan they may have already been on, and they may want to continue that. But I'm going to have to wait and see if we get any clarification on that one.
Yeah, I agree, Len, with you on that. But yeah, I think we still have to wait for clarification.
And it's interesting too. We talked about this. Since the premium is free to the individual, my guess is they would want to be on the higher plan anyway. And yes, it does hurt the employer, because that employer now has to advance the more expensive premium and wait for that tax credit. But again, I think we're just gonna have to wait and see what we get clarification from Department of Labor on that one. I'll also throw something else out there. We have been asking every insurance company in New Jersey and in Pennsylvania what their take on all this is, and they're all not answering the question because they're waiting for their respective departments of insurance to tell them how to adjudicate this. Even up to late last night when, as we got ready for this, we were reaching out to all of our carriers, and they're all saying the same thing: we don't know yet. But we just thought it was important that everybody on the call hear the information, even though it might be still a little bit incomplete. That way you can start planning and start understanding and start thinking through your internal processes. But I think once New Jersey and Pennsylvania Department of Banking and Insurance put forth regulations, we'll have a little more clarity as well. And my guess is they're waiting for the Department of Labor to put forth their clarifications.
Mm-hmm. Yeah. Another attendee asked, before those model notices come out, should we send out pre-notices?
I don't think the government will ever fault you for being overly aggressive when it comes to notices. I would just follow the rules. And the rules say, it has to be sent out by a certain date. Then they have 60 days to respond. I think we wait and find out what the notices need to say. I think proactively, it's a really strong recommendation. Identify those assistance eligible individuals now. Because remember, and I know I've said this a lot, and I'll just keep saying it, if somebody quit 5 months ago, that person is not an assistance eligible individual. You need to talk to your managers, you need to talk to your personnel teams, you need to identify who has left since November 1st of 2019 that was eligible for COBRA, that may or may not have even taken it, that is an assistance eligible individual. Those are the only people we're going to need to reach back out to, and those are the only people that are eligible for this subsidy.
Mm-hmm. Yeah, and just another clarification. So does this subsidy cover medical, dental, and vision?
Yes, it does.
Okay, that was the easy question. This one, you might have to talk a little bit more at length. So obviously we don't know everything, but one of our attendees is asking, how do you apply for the tax credit? What will that process be?
Talk to your accountant. Yeah, I honestly, I can't speak to that. I wish I could, and maybe we'll get more information on that. I do know it's a refundable tax credit. So if the amount of money that you owe in taxes is less than the amount of money that you advance on behalf of subsidy eligible individuals, I know that they'll either give you a big credit for future taxes, or they may in fact turn around and write you a check. That is a question for your accountant. I don't know the answer. I'm sorry.
Mm-hmm. Yeah.
And Lynn, too. Sorry, Grace. And yeah, there's also an advanced tax credit that they talk about in the law as well for people that maybe can't afford to pay and wait for the tax credit. But I still think we're waiting for more information on that.
Thanks, Joe.
Yeah. And so what if an employee was single and now married? Can they cover their spouse and their new baby?
I'm going to have to say no to that one because they weren't enrolled, so they don't have a right as a COBRA eligible beneficiary to enroll the spouse and the baby. Again, maybe the regs will reverse that position, but I think just general COBRA rules would apply and they wouldn't be eligible.
Mm-hmm. Yeah. So the last question is, what should employers do now before model notices are issued by the Department of Labor, which we can help you answer today. If you go to your handouts option in the menu for GoToWebinar, we have included an employer action checklist for employers to take a look at. As Lenny has reiterated several times today, this is an evolving topic, so we don't have all the answers now, but we will be sure to update all of you as soon as we know more information. I don't have anything else to pester you about today, Lenny, so just thank you all for joining us. I'm not sure if there's anything else you wanted to touch on this morning.
No, I will say that it's not pestering. That is why we're here, to answer these questions and to bring information to all of our clients, as it becomes known to us. Thank everybody. Thank you, Grace, for moderating. Anybody has any questions and wants to reach out directly, please do so. As we get more information, we will clearly be pushing it out.
Mm-hmm.
Great.
Absolutely.
Thanks, everyone.
All right. Have a great day.
Thank you. Thanks, Grace. Thanks, everybody.
Thanks, everybody.